it's time horizon that matters the most. So Shiba Inu might outperform over periods of risk where it becomes a meme and then it disappears, or it becomes less significant in value. Doge, let's see how that changes as Tesla start to accept. My view on Bitcoin kind of remains what it always was, which was, and I coined this a while ago, is I think of it as the kind of perfect collateral layer of this new digital economy, because it's pristine collateral in the way that it can't be debased. You know, if you think of how, let's say, a treasury bond works, it's kind of weird because when everybody needs treasury bonds, the Fed creates more of them. So your collateral is actually worth less over time, which is the debasement of money idea. Now, you can't do that with Bitcoin. So if Bitcoin is your base layer of collateral, then what you get is an ability to get paid for people wanting collateral in a collateral squeeze, which is what the financial system needs at its base. But it became obvious to me that Bitcoin doesn't solve every problem. It solves certain problems really well, and others it doesn't solve as well. So that was really my evolution. And then as the space broadened out, you realized, okay, this is an incredibly deep, fast-moving space with so many applications that it doesn't make sense to be all on one blockchain. Different blockchains will specialize in different things. Network effects are real, and how people drive network effects are not only growing the network, but defending the network. So that's what the Bitcoin narrative is. The incredible maxi pushback is the defending of the network. We should conquer all. But the reality is, I think that, and the question I'll give back to you is, what is the money part you're trying to solve? Do we have to solve every part of money, or is that just a legacy way of looking at it? Can we break money down into certain functions and split it down? The only thing I can't square in my head yet is, you and I both talk about it as a base layer or pristine collateral. The issue is it's not being used as such by anybody. I can't get my head around, because actually what is the collateral of this current system is ETH. Now, I'm no ETH maximalist either. I'm just an observer. And I'm like, I can't square that away, because it's not like at the bottom of every DeFi protocol is the collateral of Bitcoin. It's not. Yeah. It depends what kind of adoption we're looking for within it. If we're looking for nation states, corporate balance sheets, and others, then stuff like Ethereum doesn't make sense, because it's not trying to be money. It's trying to do other things. But base layer of money, yes. I mean, it works at that kind of sovereign state level, corporate level, a supranational entity level. Predictability itself does not necessarily generate superior returns. I mean, and so that's how I look at the ecosystem. I look at network adoption. Now, whether that's Ethereum or Solana or NFTs or any part of the ecosystem, and use that as my guide, because what I'm trying to do here is capitalize on participating in a technological revolution. Some of that is money, and that can be separated out. I can just own some Bitcoin. But like we do with US treasuries, we don't own them all the time, because there are times when you want to go out the risk curve and times when you want to come further closer to the risk curve. So that's kind of how I think of it. It's time horizon that matters the most. So Shiba Inu might outperform over periods of risk where it becomes a meme and then it disappears, or it becomes less significant in value. Doge, let's see how that changes as Tesla start to accept it, Mark Cuban starts to accept it. Who knows? Can they build the other side of the network effects? That's possible. But I think over time, these things will be proven out and where they fit in the ecosystem. And, you know, Ethereum's network adoption has been faster than Bitcoin recently. So we've seen that growth. Will that play out in the next 5 years? No clue. But our job really is to find that. Having a philosophy doesn't really help you as an investor. However, I also believe that, well, because every time I've seen people with an anti-Fed philosophy or an anti-this or a pro-that, they always get killed. There is a difference in this space because the technology is integrated with the network itself. So people can be philosophical builders on this network because they want to build a better future. And that's great. And I completely encourage that. But don't criticize somebody else for not sharing this philosophy and that if you don't, then you're a heathen. That smacks to me of religion, and it's not. That shouldn't come into investing. I don't think any of us can play the voice of God, and the market will choose. So if the market wants cheaper, less decentralization, faster, those trade-offs the market will take. And we can yell from the sidelines saying, how dare you do this? And we sound like gold investors.
Sure.
You know, we have to be really careful on imposing our wish versus what the market chooses. Because if not, we get left behind often by sticking to a prior narrative. I think what I do love about this space is there are people focused on specifics. So spreading the core philosophy of Bitcoin, if they can get network adoption of their narrative, fantastic. It's good for everybody. So it's kind of, it's more fluid, I think, than people want it to be. How are you going to stop it? In a free market full of entrepreneurs all looking for an edge, it's impossible to stop. Now, so you have to hope that the market sees the relative differences and understands the trade-offs. And we can talk about that and explain it to people. But the point being is, because it's decentralized, it's not like Google making a decision here. There's millions of entrepreneurs deciding to try something different. And we can't say don't. I look at it as enabling the digital age for the transfer and ownership of value, in whichever format that comes. And we will have millions of different needs and use cases for millions of different things. Which ones survive is like any business. Which network survives, it depends whether people believe in it, they find utility from it and value from it. If that is the case, it can survive. But we don't know where this is going. So I'm not thinking of it in any way as an investor in my long-term horizon, apart from the fact that it's probably, whatever it is, $2 trillion today, and it probably goes to $200 trillion. How that's composed in the future, I have no idea. But what I know is where it's going and why it's going there, because to create the internet of value, which is distributed, giving ownership back to the individual away from giant corporations, is something that the whole space is building towards. So that philosophy, everybody shares, which is interesting, versus the specific philosophies of different protocols. I don't believe in a winning blockchain. I think it shifts over time. I believe in interoperability and the fact that we will choose to trade off. Let's say we want to give out some NFTs to Real Vision users. Now, we might not use Ethereum because it's going to cost us $250 to mint. So maybe we use another chain. But if it's interoperable, you can then store it in your Ethereum wallet. Again, I think we're so used to the monopolistic tendencies of large corporations who can create moats that we forget that this is almost the opposite, and we don't know what the outcomes are, and that's half the excitement of the space, is not knowing. Now, as you said, I don't think there's any competition to Bitcoin at that moneyness layer, that base layer, that pristine collateral, because nothing else is trying to solve for that, because it's actually hard to improve. But for the other elements, once interoperability comes in, we can use Bitcoin, Ethereum, Solana, whatever we want, interoperably for different purposes. That's going to create a whole new hybrid structure of opportunities that we just don't have today, which is interesting. I kind of think that each individual network has its narratives and sub-narratives. If that narrative is attractive enough to enough people, it will grow as a network. And if it's not attractive, it won't grow as a network. So Shiba Inu is unlikely to grow as a network over time unless it has a network utility, which it currently doesn't have. So in which case, interest dies over time. So it's the same if somebody sees something as too centralized and the crowd, the hive mind of people involved in this, decide that that's not what they want. They will migrate to a chain that has more decentralization. So again, I don't think it's up to us to say, but we can choose the ecosystem we want. So I choose to be a more active participant in the Ethereum ecosystem because of how it treats its network participants, which is less combative than than those in the Bitcoin ecosystem. That will change over time too. Narrative shift, people shifts, that kind of stuff. But, you know, I think we tend to coalesce around places, networks that we feel suit our needs. And if the market decides that decentralization, the ultimate decentralization is the need, they will coalesce around Bitcoin. If they don't, they won't. Because Metcalfe's law would state that it's the number of connections on the network and the interconnectedness, right? Bitcoin has an issue with the interconnectedness because it doesn't use smart contracts as yet. So you're creating less interconnections between the network. It has some giant network participants, but networks aren't driven by the single large participants. It's driven by the whole thing. So what you've got to look at is what is the user growth and the transaction growth on Bitcoin versus other chains. And you'll find that it was more lackluster than others over the last 12 months, and hence why it underperformed. The macro environment is, I think, why we're seeing volatility right now is the shift of narratives. Markets don't like that shift. So the narrative was the inflation shift. The inflation shift last year, I think what happened is inflation was real and inflation destroyed marginal spending and marginal investing. And I think we've seen it in meme stocks. We've seen it across the market. We've seen it in cryptocurrencies where the marginal investor got marginalized because they didn't have enough money. So I think that was one of the features of what happened. And the bond market was pricing in some more inflation, but not a great deal. However, that narrative is shifting. All the forward-looking indicators I look at look like both growth and inflation are slow much faster than the market expects. So then they're struggling to think, how do we price growth equities? How do we price other types of equities in that shifting environment? Because we're going to have a period of time where growth is slowing and inflation is going to look high, and then inflation follows because inflation lags. Central banks are more likely to get away with one hike, two hikes max before they're looking at stimulative measures again. Because I don't think the economy has got traction, and we don't know what the true traction is of the economy until maybe 2 years, 3 years after the pandemic recession has followed through. That's very typical of every recession I've ever followed, is basically there is a growth slowdown that comes fast afterwards. The market panics, starts talking about recession again. Usually that doesn't happen. There's generally more stimulus. So I think it's very supportive of crypto prices overall. I think crypto's gone through that transition phase. We saw the marginal spending, investing in crypto go down. I think now all I'm doing is speaking to large institutions about investing. So I think the ongoing investment thesis continues. And I think that the central banks will be more dovish than people expect going forwards. So we should have a longer cycle with more tailwinds than most people expect right now.